Hello, it's Robert Miner with Dynamic Traders Group with this week's brief 5-minute DT update and trade strategy for our YouTube subscribers and Twitter followers. Let's get at it. Going to take a quick look at gold, which we've looked at off and on over the last several weeks, including just last week. Before we do, I want to emphasize one thing is I'm not looking to forecast the market. I'm looking to trade the market. The only reason I ever look at a chart is if it's going to give me an opportunity to make some money. So we're not looking to forecast the future. We're looking to identify trade setups with a high probability outcome and acceptable capital exposure. Let's look at gold. As you know, a couple of times in the last few weeks, I've been looking for buy setups in gold. We've had a couple almost ideal technical setups right off of the November 12th low. The day after it on the dual look back momentum bull reversal was a great setup because the weekly momentums were oversold or bullish, and then 2 days off the low here a week or so ago off of the November 26th low was another great setup. Again, it was a dual time frame momentum setup. There's all kinds of time and price around this low. However, what's going on here the last week, especially on Friday, what happened? Boy, a big down day on Friday, and frankly, I don't even know why that was. There must have been some news event that created that. But that's not the kind of follow through typical if we've had a setup for the long side and we're long. So that's why we have our stops really close to the market. And as far as gold is, a stop no further than a close below 1460.80, which is just a little bit below Friday's low. And more than likely, that stop's going to get hit. Why is that? Well, we've made a dual look back daily momentum bear reversal that's almost always followed by 3 to 4 days of sideways to down, what I call it a net bear trend. So I suspect we're going to get stopped out of those long trades. And if that's the case, where are we at? Well, one thing to keep in mind, again, not forecasting, but more than likely, there's not anything that's changed in the weekly position that we're in the process of creating a weekly low. There's nothing that's changed that this is a corrective decline. And when the correction is complete, then we should begin a bull trend to a new high. Nothing's changed with that. So what we want to look at is the next potential daily low to coincide with the weekly low and a much higher time frame corrective low. So when you get stopped out of a trade, don't throw in the towel because the higher time frame technical position probably has not changed. And that's the case here. So here's what I want you to be aware of. I don't have a specific trade strategy if we get stopped out this week. But if we do, here's the high probability target on the downside around 1443 to 1430. That's the 127, 162% external retracement of the last potential correction, potential flat ABC, and it surrounds the 50% retracement. Now, every trader is going to be aware of the 50% retracement around 1432. They won't know, most of them won't know, that it's reinforced very significantly by the end of wave 5 price target zone. So we want to be aware of that if we continue lower. That's very critical. We want to be aware that at any time we could complete this corrective decline, and following the next daily momentum bull reversal, we'll be taking a close look at a specific trade strategy. That's again if we continue lower, which it sure looks like we're going to. And a good possibility that the next daily low would be made December 3rd or December 12th. So keep all of those things in mind. Again, we're technical traders. We look for technical setups with a high probability outcome and acceptable capital exposure. So this is another one we want to keep alert to in the coming week. One more I want to bring to your attention, and that's the euro. And of course, you trade the dollar. It's going to be just the inverse of what I'm going to talk about here for a couple minutes. And that the euro, boy, it's been acting just perfectly technically. And we had this advance that we were anticipating. It ended up being a beautiful 5-wave advance, and it went above the last swing highs. That indicates that the higher time frame trend should be bullish and that this should be a corrective decline following the dual look back daily momentum bear reversal here a couple of days ago. So we should be making a wave 2 correction, and when that's complete, continue the bull trend to a new high. It's a little bit like the euro and the dollar tend to trade together, not necessarily the same patterns, and they're not correlated all the time. But if we get some we're anticipating in one, we want to look at the other one. I said euro and the dollar. I'm sorry. I meant euro and gold tend to trade together somewhat anyway. So we want to, when we have like a potential gold reversal coming up, I always take a close look at the euro and see where it's at, and vice versa. So here we are, more than likely we completed a 5-wave advance. We're completing a corrective decline. More than likely we got another 2 to 3 days sideways to down in the euro. But when we make that next daily momentum bull reversal, if price is above the November 29th low, that's going to be the ideal setup to have completed a corrective decline. And what follows a correction or resumption of the higher time frame trend to a new high. And in this case, more than likely it's going to be bullish. We made a weekly momentum bull reversal last week. We made a 5-wave advance. This should be a correction. That's going to be potentially really the end of next week. So just be aware of that. Be aware of whatever indicators that you use that help you to identify bull reversals. Now you want to be really tuned into those over the next few days for a setup on the euro that, when the setup is complete, could last a net bull trend for several weeks. So again, I'm not forecasting that's going to happen. What I'm doing is I'm identifying the technical position and what technical reversal is necessary for me to actually take action and make a specific trade. It's about trading, not about forecasting. Take care. I'll be back with you again by next week.